We'll carry on from where we left off. We were just considering that we all have very strong support currently supporting the market. We have triggers, of course, on the hour. We have triggers on the short term or intermediate term 30 minutes. Let's check these again. So back to 30 minutes. There's a trigger here. We did segregate the 15-minute chart, and we have a trigger here. Let's take this now to 5. All right, so we have, of course, visually, that's it. We appear to be having an ending diagonal. We would take the best, and the best is because we believe we have a 1 and a 2, we have something like a 3. We were doing an internal 4. An internal 4 will bounce an internal level 3, and that is an internal level 3. So the best is really $68,600, $68,400. So if we don't have longs, I believe we may have a half size, so we could just add another half size. We would consider to buy $68,500, $68,450. I'm looking at 50% here. I could also get 38.2, $68,300 or 68,230, 68,300. Take this now to 30 minutes. All right, so the best entry is 68,300, 68,400. We have 50% and 38.2% here. We're going to have a hedge at 67,400, about $1,000 lower, or be it sometimes even 900, but it's best to be $1,000 lower. You want to have a hedge best at this point or that point, and this point here is 67,000, about $1,500 lower, just to set and forget really, and be out of the volatility. Keep in mind that we have a 1 and a 2, we have a breakout into a 3, but if we are not correct, we believe we are correct because this is a trigger. If this is a 1 and a 2, 3, 4, and a 5, when we have a retraction, and the retraction must bounce a level 3 if this is a trending market. So I can, of course, do this. I'm seeing double inverted heads, and I'm still seeing shoulders, these kind of shoulders. So I may fall back to 50%. All right, and I will be supported by the 200-point moving average before moving higher. So I must have the hedge at this point. I must have the hedge below the 200-point moving average if I want to prevail. Must have the hedge below the 200-point moving average, and I must have the hedge below level 3. And this is a 1 and a 2 here, so this could be a 3, 4, and a 5. So the hedge must be below level 3. We'll assume this is the level 3. We think it's a breakout, but we're going to hit the neckline, so we may have a retraction. I hope it's clear. So I can take this off to make it more easy to read. All right, we have a 1 and a 2. We have an internal 1 and a 2, 3, 4, and a 5. So we should never fall again below that internal level 1, and we're doing these high shoulders. But suppose, this is of course a bit speculative, suppose we are wrong. Retraction should support level 1. Want to be a bit out of the noise. You don't want to have a hedge right below level 1, of course. Protection right below level 1 is not workable. So we take it down to 66,800. At that point, we'll be in at something like 67,800, 67,500 even. It's $1,000. Fair and good and excellent. And below the shoulders, above the head, we do the long, and we are going to be holding it to resistance 1 this week. Resistance 1 this week is 70,000, 69,992 or 70,000, of course. This is resistance 1. I would also go for, if not resistance 2, midway between, just midway, 38.2% or 50%, between resistance 1 and resistance 2, 70,950 or 71,000 should be fine. So the entry is around 67,800 all the way down to 67,500. If we get it, the hedge is $1,000 below the entry. If we're in at 67,800, you can have a hedge at 66,800. If you're in at 67,500, you can have a hedge at 66,500. We use a hedge and not a stop, meaning if the hedge gets opened, we attempt to take profit at the next internal support on the 15-minute time frame. If it don't take profit at the next internal support and the market bounces, you want to have a stop loss for the hedge above a level, internal level 1 or above a level 1. Just above a level 1 is best, or slightly above a level 1, so that we do not carry shorts when the market, because the market could just reject very strongly and move very strongly to the upside. We don't want to be carrying shorts. Any hedge at this point must have a take profit very close to the hedge. Very close to the hedge must be the next internal support on the 5 and 15-minute chart. So let me take this to 15 minutes just to clarify that point. Suppose I'm going to have a hedge below that level 2. I'll take profit at support 2. That is all. So my hedge gets opened at 66,800. I take profit at 66,400, 66,350. I don't hold longer. I take profit immediately, add the money to my account, and still hold the longs. And there will be a bounce. I shouldn't really, because of the strong support that we're seeing. We're seeing very strong support on all the intermediate term frames. All right, let's move on. Let's just review the daily, because I don't remember we looked at the daily structure. We have good positive momentum, and would want to check the candle structure. And like we were saying, yes, probably we have a tweezer. We had double tweezers, really. One failed. Maybe our belief is that it failed because of risk sentiment. So we were having a bounce. We had negative tweezer candle, but this is now reversed, which is a very good entry trigger, really. Very good entry trigger. Maybe we will not, but I believe we will. Maybe we will not get that entry at 67,800. So in order to know we get the entry or not, you want to look at momentum on the 5 and 3 minutes, but I believe we will, because we appear to be topping at the neckline in an ending diagonal, so it's very likely we will get that retraction. But we're not seeing negative momentum on the micro frames on the 2 or 3 minutes, but we are also taking the chance of getting a retraction, and therefore we will just attempt to do the long at again, like I was saying, we're for taking the chance of seeing the retraction. The earliest is to take the long at 67,800 and have the hedge at 66,800. The very earliest is 68,400, which is a bit too high, almost the neckline, but I believe 66,800 should be seen. It is also 66,800 should be seen. It is this small shoulder level here. So we stand at 66,800 or 66,900. This is 820. We'll just stand at 67,000. I'm sorry, 67,850. So 67850, 67,850. There's bound to be a retraction, and we probably will see 61.8, if not slightly higher. This is the normal proportion that must be seen.